in my opinion, Simon Property Group is one of the best REITs in the world. We can see it's up 22%, which almost exactly matches inflation over the last 5 years. And this has been one of the most inflationary periods in the United States history, right? So, and then if we go back historically, I don't know, to 2000, right? You clearly would have been destroying inflation. But even if we take, something like 2012, you probably were beating inflation during that period too. And that's after a massive run up. And we can see you get a 4.5% dividend yield on top of that. So this fits perfectly into a dividend portfolio, aiming somewhere between, maybe 3.5% to 5%, while ideally beating inflation, but at least matching it. And this one fits really well in that. You're at that close to the top end of that, 4.65, while also counting on this stock to match inflation. Ideally beat it, but at least match inflation, right? So we can take a little bit of a look at the PE of this stock, right? Somewhere in the 19 to 27 range. The forward PE is a bit higher, but that's mostly just because they had dramatic beats in Q4 and Q1 in 2024. So you aren't quite as aiming as high for that, but it's not like this company is shrinking. You just had two dramatically good quarters, So PE, we can say, let's just be conservative. Let's say it's 27. But honestly, for dividend-centric stocks, in my opinion, PE isn't as important as, history of share price and dividend yield, right? Because if you have a consistent track record of a dividend stock that has increased over 5, 10, 15, 25 years, the odds that it's going to just start doing horribly or is horribly overpriced unless you're at a crazy peak, which right now we really aren't. We aren't super cheap by any means, but all these REITs have been doing well because we're expecting, right, the rates to continue to drop, and a lot of these companies, basically every REIT relies on high amounts of debt for property, not like crazy where you're over leveraged, but you rely on debt for this sort of thing. So all the REITs are doing well, and this is near high. It is, definitely at a 52-week high or right near it, right? You're at 182 compared to 186. So this isn't like a super cheap opportunity. However, for REITs, I don't know if there's any super cheap opportunities for consistent companies that have just done well. So, but I could be wrong, I guess. So yeah, I mean, if you look at the dividend history, it's been increasing, but it was kind of hitting crazy highs. They had a little bit of a bounce back. I think a lot of just because of the land they own, right? Which is more like shopping malls, not like crappy shopping malls, but like legit stuff and kind of like destination areas. It was hit pretty hard during COVID. Still hasn't quite hit those peaks, which is why you were seeing, right, crazy peaks kind of in that 2015, 2016, 18, 19 range. So, and then it fell off so much during COVID, right? So, I mean, yeah, if you expect another pandemic to happen, I guess SPG probably isn't going to do super hot during it, but I wouldn't be too necessarily worried about that, honestly. So, I almost talked about it as a recession hedge, but it really doesn't really act like that, but you don't really need it to. So, also, Schwab's rating for it, they give it an 18 percentile rating. So they think this stock is going to do very well over the next year. I believe it's a one-year outlook. They reiterated that about 7 days ago or so. But yeah, top 18 percentile is very, very good. I don't know if they factor in dividends to it. I would assume so, because even, they're probably projecting it to do 10 to 15%. I'm guessing if they expect it to be in the top 18% of performing stocks, because the average stock goes up, S&P 500 on average goes up 10 to 12% every year. So if we're looking at the average stock is 50, this is 18, this is much better than that. So Schwab thinks it's going to do really well in the short term. I don't do short-term stuff. I don't really know. I'm a long-term investor, because if I start making short-term predictions, people can start looking real silly. But I don't necessarily think this is a super crazy cheap stock right now. However, I think it's a consistently good company that has brought value back to shareholders over the long term. So, especially as a REIT, right? Because it's not necessarily an easy industry to just win at. So, and this is one of the larger ones in the entire world as well. I assume most of you know that, but they have a $68 billion market cap. So, a lot of other good ratings along by average there, right? So, actually, let's look a little bit at the historical PE first. Right, yeah, we're right in that range of, we're a little bit expensive, but like I said, everything's up because of rates. going down. So we're a little bit more expensive, somewhere between the 16 to 24. Obviously, we're at the 24. And for PE 19 to 30, we're right there. So it is a little bit on the expensive side, but it is nothing crazy, nothing to be concerned about if you're in this the long term, right? So we can see other things, right? It's 6 of the 18, so a third are saying buy or strong buy, the rest are saying hold. Usually for these types of companies, you don't get any crazy, oh, this or that, like, oh, it's super strong buy. But then again, you wouldn't expect it at this point either, where, like I said, we are at basically 52-week highs. I think I've said most of what I wanted to in this video. I like SPG, I like it in dividend portfolio. Is this like a super, oh, this stock is like, super cheap, you got to buy right now? Not necessarily, but this is a good consistent stock, and we can see over the last 25 years this stock is consistently deriving profits back to its shareholders. So I really wouldn't be worried about it as a long-term hold. Not necessarily, ooh, super cheap, you got to jump on it. But that's just my opinion. I think it's one of the better REITs you can get that matches inflation and does a yield this high, personally, right? And there's quite a few others. I've covered Vici on this channel. I've covered which I'm struggling to remember exactly what the name behind that company is. I think it's Realty Income. That's what it is. So, but anyways, I think this is a good company. I think it is. But I think I'm going to wrap here. If you guys enjoyed the video, I'd appreciate if you left a like or subscribed. I notice whenever anyone subscribes to my channel, YouTube continues to recommend my content out more. So it just does better, helps the video and the channel perform a lot if you do hit subscribe. If you want to see content similar to this on my channel and want to keep watching stuff. But I appreciate all of you for watching, and I will catch you in the next video.